and we highlighted for you, which states that did we receive the 8609s that were signed from the state agency? And if we answer no, we're required to stop here and do not go to Part 2. Part 2 is not on this slide, but Part 2 is the calculation for to claim the credits in the first year for your tax return. So the point is that if we don't have the 8609s, we mark this no, we're not supposed to, and the IRS will look, under audit, they'll look at that, whether or not you completed that box, and did you actually have reasonable cause to check off no, but still complete the form. And that's what we're going to get into a little bit more detail here. So from the IRS standpoint, they kind of look at, why was there a failure to complete the certificate and supply it to the IRS, which is, they're filed in Pennsylvania once Part 2 is signed by the tax matters partner. In essence, the IRS cannot, if they don't have it, then they really cannot determine whether or not your project's been approved by the agency to receive tax credits. Therefore, that if they can't verify that, even though you may have a binding agreement that says you received an allocation, their viewpoint is you should not be claiming those credits. And if you happen to claim the credits, one of the ramifications is that you will potentially be disallowed those credits if down the road you are deemed to receive the 8609, we'll say in a couple of years after you claim it at that point, but you weren't able to ascertain that you actually had the 8609s when you filed the return prior to that, that they could actually disallow it. And that's a problem.